to $34.98 billion last month. We're also tracking GoFirst very closely. GoFirst is now looking to resume flights by the end of June. The indication came even as NCLT approved the appointment of a brand new resolution professional. And GoFirst's insolvency is also IndiGo's gain, as India's largest carrier acquired over 61% of the market share. The European Central Bank has now raised interest rates for 8th successive time as expected on Thursday, signaling a further policy tightening as it battles high inflation. Meanwhile, China has cut policy rate for the first time in 10 months as economic rebound cools. And the Advertising Standards Council of India, the advertising body, has come down sternly on digital ad practices such as non-declaration of final price upfront or creating a sense of false urgency to woo consumers, and has released guidelines for the same. All of that and more on this bulletin. Joining me at this point in time in the studio is my colleague Amit Ranjan. Also joining us is Karthik Malhotra. Karthik, good morning to you, Karthik. We are tracking the import-export story closely. Exports now declining for 5th consecutive month.
That's right, Shweta, and not the best of news to have heard. While we might rejoice that while exports are declining, we also have a situation that imports are declining. But imports are declining. The value of imports is declining primarily on the back of cooling of commodity prices, which doesn't really mean that we are importing any less than what we were importing earlier. And it's not really, a tick mark on India's manufacturing story that, hey, our Atmanirbharta or our self-reliance is paying off and we are not importing as much. And it's also worrisome that exports have dwindled. Exports have gone down about 10%, 10.6% or so year on year. And the figure right now rests at about $34 billion. Which is not great. Now, that's something that we can't control much because it's purely dependent on the demand from international markets. And we've seen that in the wake of inflation, in the wake of rising interest rates the world over, demand is obviously dwindling. And as demand dwindles, non-essentials take a back seat. And as a result of which, countries that we used to export to are not importing as much from us, or even other parts of the world for that matter. Even China, our neighbor, is finding contraction in the economy by way of exports going down. So overall, the fiscal deficit has, the trade deficit has widened, and it's widened to about $22 billion or so. And that also is a 5-month high. So we were contracting, narrowing the trade deficit, and that's no longer happening on account of successive contraction in exports as well as the value of imports.
Okay. It's interesting because even as exports are down, imports are down as well. And that, as a result of which we've been so far able to contain the trade deficit. However, the percentage at which exports are now going down is significantly higher, at 10% and over 10%, while imports are down just about 7%.
6.5% or so is the figure on import. But like I said, it's also a function of the dollar strengthening against the rupee, as a result of which exports should get lucrative. And it would have been a great opportunity for India's export market had the world not been in the grip of inflation. And we're talking about major economies here. We are talking about Europe. We are talking about New Zealand. We are talking about our neighborhood, whether it is Sri Lanka or Pakistan. Not that we export to Pakistan, but overall the whole economy is dwindling. US is also seeing a very, very small growth number. It's not technically in recession yet, like New Zealand, like Germany, like many other parts of Europe. But it's in a state of stagflation that interest rates are much higher than growth rate. So overall, the economic scenario worldwide is such that even despite a dollar strengthened well against the rupee, we are not able to rake in the export numbers. And on the contrary, imports, of course, while the import number has come down, that's come down on account of cooling of commodity prices. So not really a great manufacturing story to write home about that, hey, we are not importing as much and hence the trade deficit is under check. It's under check on account of softening of prices.
Okay. So not a great story there, but of course that is on the back of the fact that economies all across the world are facing headwinds. In fact, they're facing headwinds from US to UK. We're tracking, of course, recession in Eurozone. So essentially on the back of the fact that there is lower demand all across the world.
That's right, absolutely, and that's what I just stated. That it's completely out of control for India to alone work on, because the whole world is dealing with inflation. Central banks the world over are tightening policy. US made an exception 2 days back by hitting the pause button, but we've seen ECB is raising rates, and overall, the environment is not conducive for trade to flourish between India and rest of the world.
All right, let's quickly move across to another important story that we're tracking, and that is with respect to Go First. We're now given to understand Go First could be resuming operation as early as June. Remember, it's 16th of June already, so you could expect Go First, and this is according to what is coming out in the media at this point in time, that Go First could come back to skies by end of June. We're also given to understand that there is a new resolution professional at the helm of affairs. What exactly happened, Karthik? Why was the change made?
So, Shweta, as I read it, it's primarily on the plea of the Committee of Creditors, COC, and these are creditors of Go First, that Go First owes substantial amounts of money to, and in the in wake of their plea to NCLT went ahead and changed the interim resolution professional to Mr. Shailendra Ajmera. Remember, Abhilash Lal was the IRP up until now, and he's been replaced by Shailendra Ajmera. And the mandate that the new IRP has is fairly well chalked out, and that is where the lessors really figure in. So I think the COC and the lessors both were not very excited with the way things were panning out over the last 1 month with Abhilash Lal, and decided to move NCLT for a change in IRP, and that change has come about. I've read in the papers as well that Abhilash Lal had no issue really with that change initiated to swap him with Mr. Ajmera. But it's on the plea of the COC and the lessors. But again, there are reports now suggesting that Go First is readying for the skies once again and is willing to maybe fly with about 157 out of 167 aircraft, serviceable aircraft that it has. That number seemed a little too high for me to believe, but I'd not really like to stick my neck out and comment on that. But yeah, so some sections of the media are reporting that Go First is ready to take to the skies, whereas others are also suggesting that the future continues to look bleak until the creditors and the lessors and their worries are taken care of. And of course, unless the aircraft that were grounded on account of faulty engines and unserviceable parts are resolved, because without that, it doesn't really make sense to take on operations once again. Because if it made sense, you would not have grounded your fleet and filed for voluntary insolvency anyway.
Right, absolutely. And given that Go First commanded a share of about 6.5% in the aviation space, has currently about 500 pilots, which means that they can fly up to 30 planes on a daily basis, means that Go First is prepared if at all it is now nudged and asked to go back to skies. And I think, something that we've been talking about, Karthik, it's in everybody's interest for Go First to come back really soon, because IndiGo is also now acquiring a greater share of the pie in absence of Go First.
So everybody's interest, I don't know, would the industry, would the likes of IndiGo and Tata Sons really want Go First to resume operations? Given the way the numbers are stacking up, it doesn't seem likely. So look at May numbers, for example, and let's see what really happened from and May 2nd May is when Go First filed for voluntary.
Okay, we seem to have lost Karthik there, but Amit, very interesting story with respect to Go First. With Go First now out of business for a while. It appears that IndiGo is enjoying and having its share of the pie and their share of the pie as well, with a market of currently at about 61%. So IndiGo there, a low-cost domestic airline, enjoying the fact that it is now one of the most dominant players in the aviation space. The Go First going under, at least temporarily, has come to IndiGo's benefit at this point in time.
Yes, and taking on from what Karthik said, maybe the Tata Sons and IndiGo may not want it back, but the consumers definitely want it back to ease prices of airfares, like we discussed a few days back. But yeah, so it's. I hope they are back because that will ease prices. But like you said, it is a good time for IndiGo and probably even Vistara and AirAsia.
Absolutely. Good time for all the existing domestic players. But, interestingly, when Go First went under, and since we've been discussing this story of aviation space where more and more carriers are needed, existing carriers, of course, dwindling in absence of enough revenues that they're able to generate, problems with SpiceJet, and we extensively talked about how lessors of SpiceJet are moving NCLT on a daily basis because they don't want to see themselves in a similar situation as the lessors of Go First, who, by the way, have not been paid back what they were promised, neither do they have their aircrafts back. So SpiceJet is another airline which is in problem at this point in time. But moving back to Go First, from the moment it ceased operations, which was to many people, as many people said, was abrupt, even to DGCA that issued notices to Go First asking it to reply within a stipulated timeline as to what suddenly happened and what about the people who had booked those flights back in the month of May. All of that could be put behind now if Go First resumes operation in June. And June, which we're in the middle of the month, so we're essentially looking at next 15 days for Go First to go back to skies.
Yeah, they had a whole lot of problems. The 200 crores that they were looking for had to pay salaries also of 2 months. So they had to basically clear that, and then the pressure from the lessors, of course, as you mentioned. So I hope they have gotten their credits, they have gotten their monies, and I hope it's back to business as usual.
Okay.
At least for the sake of the consumers, like I'll repeat myself.
Right. Absolutely. And Karthik is back with us. Karthik, the Pratt & Whitney engines, due to which Go First had to first cease operations in the first place, that issue continues to exist. Has there been some sort of resolution on that front? Because most of the aircrafts that had problems, by the way of Pratt & Whitney not repairing those engines, not coming up and doing what it was expected to do. But has that problem gone away? Is that why we are seeing Go First coming back? Are those aircrafts now serviceable?
I don't think so, Shweta, because it's in NCLT. It's already filing for bankruptcy, and there's a moratorium on any kinds of payment and any kind of return of aircraft or engines or exchange of aircraft or engines one way or another. So in the absence of that, I doubt there has been any new part, new engine, new spares coming into the Go First hangars. And at the same time, I doubt any aircrafts have been taken away from the stable to get repaired somewhere else and brought back. Right. So to my understanding, no, there hasn't been any change in stance when it comes to the Pratt & Whitney engines. But I think the interesting story which is playing out, and this is of particular interest to Amit, who's sitting with you in the studio, is this beautiful duopoly playing out between Tata Group and IndiGo. IndiGo with a 61% upwards market share, and the Tata Group combined, which includes AirAsia, Air India and Vistara, commanding about 27% of market share. So overall, when you look at this whole flying basket in India, the share of skies, if I may put it, is in excess of about 85-86% between two players. And that's a pure definition of a monopoly. So before I got disconnected, you were asking me if everybody would be happy about Go First coming back. I doubt Rajiv Bhatia or Ratan Tata would be very happy if the new IRP were to settle the issues and get Go First back in the skies soon.
Okay, interesting. And going back to your point of Go First saying that it will be able to make 157 domestic flights operational, and the fact that there has not been any resolution with Pratt & Whitney, that number looks a little too much.
That's what I started by saying. 157 or about, nearabouts of 160 with 50% of its serviceable fleet is something it could have done anyway. It's something that it did not need to ground itself for. So this cease of operations for a month and a half, by the time it takes to skies, God knows, maybe 6 weeks, 8 weeks, could be any time frame. How does the financial situation of the airline improve without it being in operations for a period of time? And therefore, with the existing faulty engines, with a reduced 50% fleet size, with the same sectors that you ply in, how do you intend to make money, and how do you intend to not file for another case of voluntary insolvency a few weeks later? Because your financial situation is not going to improve as long as your fleet is not fully serviceable and airworthy. And at the same time, your engine problems that led to the financial losses are not resolved.
Okay, so the way ahead is filled with roadblocks for Go First, as we can see at this point in time. But what's also interesting is that they're saying they're going to come back by the end of June. It's already 16th of June, mid of June here. The timeline does not look very feasible to me, Karthik. You're saying 4 to 6 weeks is what you said, but they're saying end of June.
Right. No, I said 4 to 6 weeks from the time the trouble started. We are in the sixth week already, and could take God knows how much longer. But yeah, I mean, operations are definitely suspended till Monday, 19th of June.
Right.
And what happens in subsequent NCLT hearings, how the new IRP wants to manage the issue of creditors and lessors and really help the airline come back into operations, is something we'll actually have to really wait and watch unfold. Because it's difficult for me right now to imagine a situation that with the same challenges that Go First faced on the 2nd of May while filing for voluntary insolvency, those challenges continue to be on their heads, on their books. So what's the time hurry to resume operations with the same challenges? I think it's important for those challenges to be resolved first, one way or another. And if that leads to survival of the airline, and if that leads to flying operations resuming, of course, more than welcome. Higher the competition, better it is for the country, for the consumers, and for other airlines who want to come and take part in the Indian aviation story. But unless those issues are resolved, it doesn't make any sense for this urgency to go back up in the air.
Absolutely. I am in absolute agreement with you. Seems like there is a bit of an emergency here for Go First to go back to skies without really, dealing with its current existing issues with respect to its engines, issues that it faces with respect to, the management, all of that, of course, spending, and the money, the operational money that it hasn't paid back to its creditors, to its lessors. All those issues continue to exist, but Go First there promising that it will come back to skies by the end of June. Good news there for people perhaps who've been dealing with high prices of airfare. Maybe that would go down. I mean, it's all in the realm of conjecture at the moment. We will, of course, keep tracking that story very, very closely. But shifting focus to another story that broke last evening and could have repercussions for two-wheeler industry, and that is with respect to Hero. And we're now given to understand that Hero Motocorp is under investigation from Ministry of Corporate Affairs for alleged governance issues. What are those details? What exactly happened at the helm of power? Perhaps, Amit, you could shed light.
Yeah, so in April, the Income Tax Department had detected cash transactions worth about more than in the tune of 100 crores that were used for the purchase of a farmhouse by their executive chairman, Mr. Pawan Munjal. Allegedly, in this in public interest, the MCA, the Ministry of Corporate Affairs, had initiated an investigation regarding their Hero Motocorp's relationship with a third-party vendor. This was alleged. So, Hero Motocorp has now responded that they have not gotten any communication from the MCA regarding this investigation. But this investigation came even as Hero Motocorp added 100 new stores to its existing whatever retail outlay. And it is basically, like you said, corporate governance is basically investigating the ownership structure of Hero Motocorp.
Right.
So that is where it stands right now.
Okay. Karthik, it's interesting because the Hero is saying we have no communication from the ministry, and they continue to maintain that since last evening up until today, this morning. And this is a story that broke on Reuters, one of the news agencies, where Reuters says that MCA will be assessing company's relationship with a third-party vendor in case that is related to diversion of funds. This has primarily got to do with executive director of Hero Motocorp buying a property and taking funds from the company. Serious allegations there on a company that has a reputation to keep.
No doubt, no doubt. The allegations are very serious. Now, I'm at a loss to understand, are we talking about the same instance of corporate governance lapse, which accounts for the relationship with a third-party vendor, as well as the 100 crore rupees paid in cash allegedly for a farmhouse purchase? So I'm not sure if we are talking about one issue or two issues here, and we are hoping that there would be some light shed on that subsequently. But yeah, like you and Amit very rightly pointed out, this seems to be a pure play issue of corporate governance, allegedly. And of course, we'll have to wait for reports to come out and then really assess and understand what really transpired, who this vendor is, what is the kind of relationship in question here, what is the kind of financial or otherwise exchange that took place between Hero Motocorp and this third-party vendor. Was there some sort of favoritism in play? Was there some sort of kickbacks in play? These are all in the realm of speculation right now until the details emerge. But it definitely seems like a fairly serious case of corporate governance malfunctioning, malpractices. But it's all, of course, like I said, in the realm of details yet to come out, and hence, we're just quoting what we know from other papers. But the stock prices of Hero Motocorp have been taking a bit of a beating since yesterday. Not as grave a situation as one would have thought a news item like this would do. But Hero Motocorp shares are down about 3% since morning. Remember, yesterday they were trading in the range of about 2,900 upwards. Right now, as you're speaking, stocks are down at about 10:30 a.m. They are down to about 2,814. So there's a sizable dip of about 3%. But yeah, I think the markets are also waiting for some sort of clarity to come in on account of who this third-party vendor is and what the real allegations of misgovernance are, without really stepping the gun too much and making assumptions of their own.
Absolutely. And in fact, newspapers and news publications are attributing this to an earlier raid that was carried on in March of 2022. The IT department carried a raid in various premises linked to Hero Motocorp, and raids were into, as you rightly pointed out, allegations of tax evasions. An investigation was carried out. Officials were looking into financial documents, business transactions. And in fact, Hero Motocorp at that point in time had come out and claimed that tax inspectors visited its offices, residences, and that of CEO Pawan Munjal as a part of routine inquiry. So they did acknowledge that there was in fact an IT visit. However, not on account of any allegation that we are alluding to. They said that this was routine inquiry, which obviously you expect a company to say, but at least there was acknowledgement then that there have been some sort of raids conducted on premises of Hero Motocorp. But as of today, as Karthik pointed out and as you've also hinted at, there's been no statement that's come in from Hero Motocorp acknowledging that there is an investigation of this nature.
Yeah. And I think, like you pointed out, that it's a big brand, it's a respectable brand, and they have a reputation to keep. So they will be putting their PR machinery up and running. They basically said they have received no communication. They did not have to say that. So just to keep their reputation, they basically will have to clear this thing out pretty soon.
Absolutely, they will have to clear out, and those are some serious allegations. We will, of course, come back on that story whenever there's a clarification. But shifting focus to a story that we're tracking offshores, and that is European Central Bank has raised interest rates for 8th successive time. It is expected there is a policy tightening as countries, European Union, European Central Bank tries to get a hold on high inflation. Karthik, inflation, of course, is a big story here. Recession, inflation, you know, and Eurozone to Germany to US, everybody talking about inflation, essentially in common man's parlance, mehengai. Everybody's battling with mehengai.
Yes, Shweta, and that's the reality of the times that we live in. And unfortunately, we've seen what has happened in the world over the last 2-3 years, and it's not funny, you know. I mean, you've seen a once in a lifetime, once in a century pandemic, which wiped out economies and economic interests of countries fairly squarely. Add to that, now we are more than a year and a quarter into the Russia-Ukraine war, and that's hit global supply chains like never before in recent memory, recent history. So overall, you know, you've seen the world's manufacturing factory, China, taking a beating, the zero COVID policy sort of slowing down operations in the country and the export that the country made to other countries drastically. At the same time, there is distrust, mistrust that the world has on China, due to which it's looking at partners outside of mainland China to procure their goods from. Then there is a fuel crisis in the world with the Russia-Ukraine war and the West imposing sanctions on Russia for and hence not importing oil from there. So overall prices have gone up. There has been a shortage of supply. There has been a situation where prices have gone up because of the world's factory slowing down operations and people not wanting to buy from that factory, and at the same time rising fuel prices. A zone within Europe, squarely in the middle of a European war, supply chains hit across the world, air routes hit. So we've been in a situation where there is bound to be a rise in prices, and that rise in prices is purely what we are seeing today as inflation. Now, this inflation has got very, very serious ramifications, because you can't let prices rise endlessly. So central banks become very important cahoots here, who come and tinker the monetary policy, tighten rates. Now, why do you tighten rates? You tighten rates because you want to, you increase the interest rate because that is going to give better interest to people who park their money, citizens who park their money in banks. Now, how does this help? This helps because by putting that money in a bank, liquidity is sucked out. So your demand reduces. You don't have enough money in your pocket. You've put it in the bank because that's giving you a good interest rate. So you don't have enough money to go out and buy goods. So you've curtailed demand artificially while supply was anyway hit. So the equilibrium is met at a much lower price point. Now add to that, banks themselves get flushed with liquidity infusion. So they don't have to print currency. Right. And they can continue buying whatever necessities that the government has to spend on. Those bonds can be bought. But the other side, the darker side of monetary tightening is that as interest rates rise, even the loans that banks give out become expensive. And not just home loans and auto loans and personal loans here. I'm talking about corporate debt. So corporate debt becomes expensive. As corporate debt becomes expensive, companies slow down on their ambitions to leverage themselves for higher growth. They say, hey, let me wait for the interest rates to cool off, and then I should go to my bank and pick up some loan at a cheaper cost of capital. So overall, the economic activity takes a hit because money has come out. There aren't enough people going to the market and buying. And at the same time, supply is also a hit because companies are not leveraging themselves, taking loans from the banks and deploying it back in their operations to produce more and more. And as a result of that, recession.
All right. So thanks for explaining all of that formula. Essentially, Amit here would also be coming in on this story. Amit, you know, it's interesting dichotomy that's playing out, and that is, European Central Bank continues to hike interest rates, mainly, as Karthik pointed out, to contain inflation, and essentially an artificial way of containing inflation here by tightening the monetary policy. At the same time, China is doing the opposite. For the first time in 10 months now, it's cut rates.
Yeah. So it's a tricky situation. In Europe, in their 25-year history, this is the steepest raise in interest rates, and their inflation, even though it has moderated due to leveled due to moderating energy prices, is still at 6.1%. They are targeting around 3% for 2024 and still over 2% for 2025. First world countries, you're in the habit of seeing 1% inflation rates. They're still very high, and these are projected right now at 6.1%. And that's a tricky situation. You are deflating the economy by sucking out money. So people have less money in their hands, to put it very simply. They're spending less, manufacturing goes down. China is doing the opposite. They are trying to basically put money in the hands of people, what we call pump priming sometime, and basically kickstart an economy that is shrinking. Their base is manufacturing. They can't let their manufacturing go down. That is my understanding of why China is doing it. And so it's a tricky situation, like you say. And China is still basically, it's first world, but it has a bigger market. So they need to do that. So that is the difference between basically what Europe and America are doing on the one side by basically sucking out money, and why China is doing this, because their base is manufacturing.
Okay. Very interesting, and I want to understand this further from Karthik at this point, and for my benefit as well. Karthik, China is still, the inflation is still hovering over 6%, as Amit pointed out, which is in Europe,
yeah.
and in China also, the inflation is high. Despite that, they are cutting rates, and that would not make an economic sense. Why exactly is China doing it?
Okay, so bear with me. There's going to be a slightly longish answer. Now, China is a very interesting place to be in, right? And I'm not sure I mean it without pun, because China has this beautiful advantage that between 1994 and 2005, if I remember, the Chinese yuan was pegged to the US dollar. 2005, China decided that it's not going to peg its yuan, its currency, against the dollar, and it's going to have a floating exchange rate, which means China is free to monetize as much money, mint as much money as it wants, without it having any ramifications on the yuan's price against the dollar. Now, adding to that, what Amit said absolutely correctly is that China's base is manufacturing, and that is its real competitive advantage in the world. Now, how does China offset this inflation and recessionary pressure? It does it by incentivizing its manufacturing sector to become even more competitive. And how does it become even more competitive? By banks willing to lend more at a cheaper rate to its industries. Now, as there is going to be more credit offtake in China, it will be able to produce more and more goods in a hope to export that to the rest of the world. Now, exporting that to the rest of the world, in the case of China, has got two advantages. Number one, the volume of the exchange goes out. And number two, it is up to China to peg the yuan at whatever dollar price it deems fit, without really informing the world that it has perhaps, circuitously gone ahead and printed more currency. So maybe it has done quantitative easing, maybe it has done, remonetization of the economy to put more money in the hands of the public, to put more money via interest in the hands and loans in the hands of its manufacturers, and yet keeping the beautiful floating yuan exchange rate intact and raking in more US dollars.
Okay. So essentially, correct me if I'm wrong, it makes sense for China to do it because it is essentially a manufacturing economy.
And a floating currency.
Yeah. And has a floating currency.
Yeah. And there is a social aspect to it also. China was the most populated country till few months back. They are number 2 now to India. They have a huge population. They can't let that population be unemployed. Right now, their unemployment rate for the ages of 16 and 24 is at a record high of 20%, 20.8%. unemployment is between 5 and 6%. So they can't let that happen. They have to they have that thing to take care of, because as we all know, idle people, idle youth leads to basically unrest. So they have that thing to take care of. Also, that's the social aspect of why probably China is putting money back into the economy.
All right. So the interesting dichotomy there between what China is doing and the rest of the world, of course. India has paused a hike in rates in the latest Monetary Policy Committee meet, but China, they're cutting interest rates for the very first time in 10 months. We will keep tracking those details. But shifting focus to another important story, and that is with respect to ASCI, the advertising regulator that has now come down sternly on digital ad practices. What exactly is ASCI saying, Amit? What is the bone of contention?
See, advertising practices, basically, they do play mischief off and on.
Right.
And with advertising, if you want to put an idea out there, you can put it out there, budget for basically it coming down. And that has happened. If you remember, there was a leading cricketer's ad, who was a pilot in the cockpit, and who's romancing in the cockpit while the flight is on. And that ad had to be taken back.
Right.
So the brands and agencies have a history of playing mischief and letting the ad go out. The thing with these ads is, once they are out there, even for once, they are in the public domain. So ASCI has to come down really strictly, and I do not know how they will do it, to prevent even these kinds of ads coming out even one time. So that is my take on it, basically.
Okay. Karthik, very interesting what I'm reading at this point in time. There's been a guideline that's been released by ASCI to check, and I quote, dark practices. What are these dark practices? Number one, non-declaration of the final price upfront, which is you have a quoted price in advertisements that you put out, and they may not include your optional taxes, duties, fees, charges that apply to the buyers at the time of buying. So that is one. And the second being creating this false sense of emergency that this product is very important, you must buy it, it's a do or die situation. So all of these have come under this large umbrella of dark patterns that ASCI has identified, the advertising regulator, and has come up with a guideline for the first time.
Absolutely, and got to give it to the creativity of ASCI as well, right? Come up with such a beautiful advertising sounding trending term called dark patterns. But yeah, I think very interesting and very good observations. You see a product, let's say even when you're on a quick commerce platform or an e-commerce platform, you look at, let's say, a box of mangoes that is supposed to cost you $100. You're tempted, you add it to your basket. When you check out at some 175 rupees. Why? There is GST on the same box of mangoes. There is a delivery fee, there is a packaging fee, there is a surge fee, there is God knows what all. So the point being that consumers get lured to add something to their baskets, to their carts, on the basis of the price that they see. But that price often does not include the mandatory taxes, the mandatory delivery fee, and maybe any other optional or time band specific charges that could get included. So that is one of the dark patterns that has been identified and listed down. Now, the second one is really pertaining to this false sense of urgency. Limited stock, offer expiring soon, without really disclosing or without really adhering to any laid out fundamental strict datelines, timelines, or number of quantity pieces available in stock. It's just referred to as offer ending soon, limited stock, ending soon, expiring soon. They're saying all that does not really add up. You can't create this false sense of urgency without quantifying what this urgency really is. So these are the two major dark practices or dark patterns that emerge. One, of course, being the final price being mentioned. Don't mention what it is going to cost you X showroom, for example. Mention what it's going to cost you on road. When you look at the case of automobiles, or let's say the quick commerce or the e-commerce example that I gave you. So that, and then of course the mandatory tax, the delivery fee, and all of that added up. Now remember, ASCI does not really have canines that can bite. It doesn't really have the kind of teeth that can go and dig deep into the advertising markets. It's an influencer and a watchdog per se, but a watchdog that does not really have the mandate to go ahead and bite. So it's taking into account and confidence the Ministry of Consumer Affairs as well. And together these guidelines are getting drafted. And 1st September 2024 seems to be the date by which advertisers are expected to comply with this new set of guidelines.
Okay, so if I were to every day in the morning start this bulletin by saying this is the last time you can watch it, watch now or never, that would not be in compliance with the ASCI guidelines, Amit?
Well, we are not actually putting out an advertisement, so yeah, but
okay.
yeah, but like Karthik said, yeah, ASCI needs more teeth, and
right.
Carrying on from basically advertising, I've been there, so they have propensity to basically play mischief, whether it is pricing. So the ASCI, the ministry, and even maybe AAAs of I, they should come together and come down with some very stringent laws that basically that prevent these people from even playing mischief one time.
And on the issue of teeth, and maybe perhaps Karthik can also weigh in here, ASCI essentially is a body that comes up with guidelines. It can name and shame, but there's nothing more that it can do on top of that, Karthik, and that perhaps is one of the reasons why ASCI has not been able to exercise any influence on mischief and on ads that do not comply with the law of the land.
Influence, yes, it does exercise influence, but it does not have a statutory mandate to act against a particular advertiser or or any other body for that matter. I mean, it can go ahead and on its own volition go to courts and file a petition, but it does not have statutory powers to. It's not a regulator. That's the difference between a regulator and a body. Like ASCI, a regulator has got statutory powers to issue rules, issue directions. ASCI at best can issue guidelines which are in protection of consumer interest and promote ethical, trustworthy advertising. And beyond that, I think beyond issuing guidelines, it doesn't really have the mandate to regulate the advertising sector.
All right, no mandate to regulate the sector, but has now come up with latest guidelines on various dark practices, which include drip pricing, where essentially you're not telling your customers, if you are an advertiser and not telling your customer what the final price of a product could be, you would be in violation of those guidelines. And similarly, if you were to create a false sense of emergency that this is the last time somebody can buy your product, limited stock, etc., all of that would also not be in compliance of the law. So ethical practices in digital advertising, need of the hour, and ASCI there coming out with a set of guidelines that digital advertisers can follow. But with that, it's a wrap on this edition of News9. Thanks very much for watching.
On March 20, 2023, the Intergovernmental Panel on Climate Change warned member states they were not doing enough to limit global warming. Phase out coal by 2040, appealed United Nations Secretary General Antonio Guterres.
No new coal, and the phasing out of coal by 2030 in OECD countries and 2040 in all other countries.
Fossil fuels like coal, gas, and oil emit carbon dioxide. This stays in the atmosphere